All right, I have some bullish calls we need to get to today. Rahel Solomon has those for us. Hey, Rahel.
Hi, Scott. So the first upgrade is one that RBC says is best positioned to handle whatever 2021 brings. That would be Walmart getting upgraded to outperform. Price target goes to 170 from 153 a share. So analysts like the retailer's improved and consistent U.S. EBIT performance, noting, Scott, that after key investments in the last several years, EBIT's been increasing for 6 of the last 7 quarters. And Citi is out with its top contrarian pick for next year. So this is something that they've done for 25 years. And for 2021, they are going with energy, including BP, Royal Dutch Shell, and ExxonMobil. They're bearish on tech. So, Scott, the way they get here is essentially buy the worst performing 10 stocks of the prior year and sell the best performing 10. The note advising a bit of caution, saying, while being contrarian might make you sound and feel clever, doesn't usually win the prize. Adding, however, that we suspect that contrarians may do better in 2021.
Oh, Scott. Interesting. OK, I appreciate that. Rahel, thank you. So, Joe, I look at the note here from you today, and you say it's not a contrarian call. It's consensus. Really? You think everybody's on the you think everybody's on the energy bandwagon?
Yeah, I think there's a lot of people that are very bullish on energy, commodities, and the opportunity that it presents in 2021. I continue to advise staying high up in quality. Some of the names that Jim Cramer has suggested are quality names, like a Pioneer, Chevron, ExxonMobil, diversified. But I think you have to be careful with energy. And I do believe that overall the sector might struggle, and it is because of the debt maturity that you're going to have towards the end of the year. So $2 billion worth of debt maturity in 2020. Well, here comes about $10 billion worth of debt maturity as we walk towards the end of the year. So I don't think you could paint the broad brush here for the entire energy sector. I think you have to be very tactical, very careful with it. But absolutely, I think the consensus is overwhelmingly bullish for energy.
Surat first, then Courtney. Surat, you own Chevron, you own EOG, you own Pioneer Natural, you own Apache, you maybe own some others.
Those are the 4 that I do own, actually, and I completely agree with Joe. So the 3 that I own are Chevron, Pioneer, and EOG are the balance sheet plays, really strong consolidators in this business. And Apache is just my kind of option value on a gas play. What I believe here is that, look, the S&P now has 2% of it in energy. It used to be almost double digit. These are really solid companies. They're an option value of getting the earnings right and really being the major players. It's really bumpy, and they're very cyclical, so investors need to have a tough stomach for it, but I do think you'll be probably rewarded 12 to 18 months from now.
Okay, Court?
You know what? Call me the third amigo with Joe and Surat as it relates to the quality of the names in energy. It is much smaller, and so our clients at Loop Capital have to have some exposure to it, but you want to stay on the higher end of that quality. Joe, I will tell you, though, that the debt is not as big of a concern for me because obviously they can, raise capital, they can refi that debt, and hopefully we'll be a part of that new issuance, but that's not necessarily the issue. But I think the names that you mentioned are 100% where you want to be. It's just like with the banks, right? So I think you want to stick with the top quality banks, great leadership, ones that have embraced digitization, ones that have asset management businesses, and they will be there for the long term. That investment banking and trading business is going to keep those large commercial banks afloat. That's not going to lend itself well to some of the mid-sized banks that don't have that exposure.